Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. Let's take a look again on euro currency. So yesterday actually this was really epic event in the geopolitical stage, so hopefully we have escaped the front collision between the two very powerful countries, and actually this is great. But as you understand, it's two words speaking. First of all, this definitely doesn't bring more stability in the geopolitical situation, as foreign affairs between the China and the United States currently definitely becomes worse, so it's obvious. And as China actually is a long-term player on the geopolitical arena, so it could get some long-lasting consequences for general mutual relation between the United States and China. Currently we do not see real impact on the markets. Yes, the performance that we have suggested, downside action has happened, but hardly this is because of this situation. We will see what will happen, but hardly we could call it as a positive result. Anyway, in the shorter term, you could see on the daily chart as the reverse bar has been formed. Market stands precisely in an area that we have specified around 101.60. Is confidence supported on lower time frames, but with the appearing of the bearish reversal bar, it's really big chance that we will get either deeper retracement. This is in the best scenario. In the worst scenario, this will be downside continuation. So here's what we intend to keep an eye on in euro currency. On the 4-hour time frame chart, it's nothing special actually. 4-hour time frame has turned bearish. Here as we have, guys, as you could see, obvious divergence with the MACD indicator and tops on the chart. As you know, the classic target of the divergence is bottom between the peaks that have been formed the divergence. So it means that here's market should take it out of the C point. That's indirectly confirms our some doubts, some suspicions that it really might be direct downward action. But we will see. On the hourly chart, you can see market stands precisely at the confidence support, as I said. Here's, guys, recently has been formed a nicely looking brand body sell. So if you have recognized it and maybe already traded it, well, that's great. So you can see here's thrust down, pull back to the 30% level. I do not have it on this chart because I do not need it anymore. And now the market is mostly the completed the brand body target, because here's we've got the nicely looking thrusting action. Now we'll see what happened next. So here we have the steep ABCD pattern with the XOP around 101.18, which is actually 50% support of the whole upward action, right from the lows. So, and you know that actually from these lows to the top, and you know that euro currency likes to show the 50% level, so that's why XOP might be important. But at the same time, since we have the reversal bar here and market stands in the confluence, well, also we could keep an eye on this ABCD pullback. Maybe market will form Gartner's triple to sell or something of that sort. And that might be the interesting area for a scalp short positions. You can see here is the confluence resistance. If this will be also an agreement in Gartner's triple to sell, well, this is a scenario that you could consider if you trade on the hourly chart. That potentially also could give us a larger scale, this A, B, C, top, D pattern. So we'll see what will happen. If no second leg or retracement happens, market directly will break these lows. First level that we will be watching for is XOP. But guys, this type of the performance will be bad for the euro because no significant response on the confluence. Stop action to the upside only at the COP target. So actually, it's in this case, market erase probably C point start dropping, which means the failure of this ABCD pattern, and this will be very bearish. And I tell you that these chances will be better on a direct downside continuation taken out of these lows rather than some larger ABCD pattern. Because here, this actually we can't call as the ABCDs because this top is greater than this one. And that's why this will not be the just extended retracement. This will be quite different swing now without any relation to this major pattern. So that's the logic. That's actually what we intend to keep an eye on. So two words speaking, with the pullback, you could consider taking a short position. With the direct breakout, nearest target stands at 101.18, but direct breakout here suggests rising chance on the downward continuation that just will keep going lower with the taking out of these lows, and that upside retracement is over. So that's two moments on the euro currency right now.